Hello everyone and welcome to the NinjaTrader webinar room. My name is Wesley Sinks and I want to thank you all for joining us today for our webinar co-sponsored by Eurex and Dorman Trading. As a reminder, the NinjaTrader platform is always free to use for advanced charting, strategy backtesting, and trade simulation. You can download the latest version of NinjaTrader through the Get Started link that we've posted into the room. To stay up to date with news, updates, and exclusive commentary from NinjaTrader, please be sure to like us on Facebook, follow us on Twitter, and check out the NinjaTrader blog. Joining us today in the room is Dan Gramza. Dan's a trader, international consultant, and the president of Gramza Capital Management Incorporated. He'll be discussing how traders can use Mini-Dax Futures as a gateway to the German equity index markets. He'll also demonstrate his methods of trading the Mini-Dax. Stay tuned to learn unique features of Mini-Dax Futures, explore potential market reactions to current fundamentals, and receive an introduction to possible trading strategies in this market. If you have any questions during today's presentation, please feel free to enter those questions into the chat window you see in the lower left-hand corner of the room. Toward the end of the webinar, Dan will take a moment to answer some of the questions you posted into the room. Thank you all again for your attendance today, and please join me in giving a warm welcome to Dan Gramza. Go ahead, take it away, Dan.
Thank you very much, Wesley. Hello, everyone. Welcome to Eurex Equity Indices Mini-Dax Futures Trading Opportunities. And before we get started with that, I need to go through this risk disclosure statement. The content of this presentation is for educational and informational purposes only. There is no offer or recommendation to buy or sell any security, and no information contained here should be interpreted or construed as investment advice. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more of their initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Materials in this presentation are covered by the United States and international copyright laws, and no portion of this presentation may be reproduced without the written permission of the author. I also want to say that I'm not affiliated with Eurex, Dorman Trading, or NinjaTrader. They're not endorsing anything I'm going to share with you. These are ideas that I hope you find helpful. So let's get started. And my background, just so you understand where I'm coming from, I come from the floors here in Chicago. I started with stock options, and I went over to the futures exchange. This is back in the 80s. And I've had a chance, besides trading, I've had a chance to share ideas primarily with institutional traders and professional traders through a word-of-mouth network. I circled the globe a couple times a year working with professional traders. I was just in London a couple of weeks ago and in Australia in about a month to work with the bank. So that's a little bit about my background. If you have any questions today, my email address is right there at dmgramza@att.net. So that's a little bit of influence in my thinking. By the way, it's going to come back to us when we start talking about trading strategies. And I'd like to share with you some of the things I've experienced in that regard. So let's start out with this. Are Eurex equity indexes right for you? And I think there's some questions that you might want to ask yourself if you're thinking about that. First, are you making the most effective use of your trading capital? You can benefit from the leverage and lower transaction cost of futures contracts to effectively utilize your trading capital. It's one of the advantages of this particular type product. Have you diversified your investments beyond the U.S.? I think it's worthwhile to consider diversification of market exposure beyond the U.S. corporate stock markets, as there are a number of new opportunities and product offerings in foreign markets, such as we're going to talk about today with Eurex. Are you taking direct advantage of the European market movement? Now, many of the moves first begin in Asia and Europe. and it sets the tone for the trading the rest of the day. Eurex equity indexes provide you with the opportunity to take advantage of this market movement. Now, depending on your schedule, you have the freedom to trade or extend your trading during non-U.S. trading hours or hours when the markets overlap. Europe is the geographical middle between Asia and the U.S. So trading Eurex will allow you, just like the markets do, to follow the sun. Now the current trading hours are from 1 a.m. to 3 p.m. Central Standard Time. Listen to this. As of December 10, 2018, Eurex trading hours will be extended by 7 hours for selected products. This means the market will start at 6 p.m. the previous day until 3 p.m. the next day. Do you hedge or protect your portfolio from adverse price movement? Trading Eurex products allow you to diversify your portfolio. With access to new liquid products, you may be able to identify spread or other strategies that involve multiple Eurex products. So just a few things to keep in mind. Now let's talk about the DAX itself. It's been around for 30 years. It's really an impressive index when you look at some of the characteristics behind it. I mean, look at that growth. It's over 950% growth. Let's talk about how it started. It was first published on the 1st of July 1988 with a starting index level of 1163. It's a index family, and it's calculated both as a price and as a performance index. For the performance index, the constituents dividends are calculated as reinvested. For the price index, dividends are not taken into account. The DAX index that we're going to be talking about today is a performance index, which means it does take into account the dividends. Now, according to a study by Ernst or EY, an average of 55% of the shares that make up the DAX were held in portfolios of foreign investors in 2012. So it says something about the broad attractiveness of the stocks that make up this index. Now, the DAX today is one of the most important equity indices worldwide. Listen to this one. The index serves as an underlying for more than 150,000 financial products. Futures contracts on the DAX consistently rank among the 5 most popular index futures globally. So I have a question here. Why should I, of all things, invest in the German market? Well, one, you got diversification in your portfolio. 2, geographic specific exposure to Germany. Now, Germany is a big deal because it's the biggest economy that you have in the EU. So it's an important benchmark reference that people look at. The DAX components are all global players in their business. We're going to take a look at that in just a minute. Therefore, the global economy has an impact on the DAX index development as well. So I think those are some things you might want to consider when you're thinking about the DAX. And let's look at this. Now, what you're seeing on the right, that's a chart of the stocks that are making up the DAX index. And let's take a look at these components. It's the Deutsche Börse's blue chip index for German stock market, one of the most efficient stock markets in Europe. It tracks the performance of the 30 largest and most liquid companies on the German stock market, representing approximately 80% of the aggregate market capitalization of listed German stock corporations. I mean, for you and me, as a trader, what's our other choice? We could open a stock account in Germany if you're based here in the United States. So you need access to that German stock market, and then you need to buy all those stocks that represent, those 30 stocks that represent 80% of the market capitalization. So with one trade, you and I basically do have the German stock market. And a lot of people recognize that aspect. The most valuable company in the DAX, based on market capitalization, is currently the software company SAP, valued at 124 million euros. And in July of 2018, the total DAX market capitalization reached over 1.2 billion euros. So it's a significant reference. And if we think about it in terms of, well, let's talk about today. Today I have another question here. Isn't there a concentration? Let me go back to that previous slide. Uh, isn't there a concentration risk in the DAX, uh, for example, automobile branch? Well, yeah, there are a lot of automobile stocks in here, but here's what you want to keep in mind. Also, and if so, what is the impact on the index in case of external effects like the U.S.-European trade war? Well, first, the DAX is a well-diversified index. Automobiles, yes, it's a part of that, but it's really kind of a minor part of it when you look at it that it represents 12 to 14% of market share. And trade wars, well, they could have an impact on the index, but I think it's kind of too early to tell what that impact's going to be. But what we do know is that right now the U.S. charges 2.5% on imported cars in the United States. Europe, on the other hand, charges 10%. So hopefully, and if you look at what Daimler said, Daimler came out and said, let's just get rid of tariffs. Let's forget about this stuff. And that may be the best solution yet. So again, just a few things to keep in mind. Let's move on. And let's talk about the Mini-Dax. What we're going to do is we're going to focus on one of the most active regional European equity indices, and that's the Eurex's new Mini-Dax Futures. So, why did they launch this Mini-Dax? Well, there's a few things that were the motivators here. First, if you look at the positive stock performance in the last few years of the DAX, reaching levels up to 12,000, the contract size of this legacy DAX futures reached levels of surpassing, actually, 300,000 euros. So now you have a huge contract. Mini price indices, like if you look at that gray line up there, that's the SMI, that's Switzerland. And if you look at the Euro Stoxx 50, that's the green line you see on the chart. They do not reinvest dividends into the index. And what you and I know is the DAX, which is the blue line that you're seeing up there, is a performance index. It's a performance total return index where the dividends are reinvested. So it's likely that its notional value will continue to grow further over time. And at the high levels, comments started flowing into Eurex, and they received the idea, I should say, of a smaller DAX contract. So Eurex responded to that. So for semi-professional traders, CTAs, institutional firms, the legacy DAX futures contract is sometimes a bit too heavy to accurately use for hedging, for example. So due to its notional value, the legacy DAX futures contract, the full-size contract, is typically an institutional investor product. And due to its lower capital requirements, the Mini-Dax is more attractive to private investors. As I mentioned, I traveled the globe, and I can't think of a time zone that I haven't been in that somebody is not trading the DAX. And the Mini-Dax, even at the institutions that I see, seems to be one of the preferred choices. Now, let's talk about this idea. If you're the exchange and you have a DAX contract and then you launch a Mini-Dax contract, does one cannibalize the other? Well, here's the deal. Eurex Exchange launched to parallel this Mini-Dax futures on October 28, 2015. Market acceptance has been very strong, and both contracts are not cannibalizing each other. New participants are exploring fresh opportunities trading this Mini-Dax as the activity in the legacy DAX remains stable. So you're not seeing a change in volume. As we near the 3-year anniversary for this Mini-Dax, over 18.3 million contracts have been traded since its launch. And listen to this one. The average daily volume has surpassed 35,000 contracts a day. So futures offer the benefits versus, if you look at these contracts, versus the unregulated European retail investment vehicles, such as CFDs, which have really become less popular following the historically volatile period when the Swiss National Bank made their decision about the euro in January 2015. But here's what you want to think about when you think about the Mini-Dax. You have some benefits, such as deep liquidity, price discovery, appropriate risk management for exchange-traded products, a central clearinghouse, as well as better regulation and oversight, all speak to the reasons why the Eurex Mini-Dax Futures continues to attract attention. And that's what this chart is showing us. In fact, I'll tell you what, let's look at this in a different way. Now this chart also, these four charts, demonstrate increasing trading volume and open interest in the DAX. That's on the left side, up here on the left. And over here, let me grab my pointer. There we go. Come on. Well, in the upper left-hand corner, you see the DAX, and on the right side, you have the Mini-Dax. And really what you're seeing is no change in volume. You're seeing no change in the DAX, and you're seeing the overall action in the Mini-Dax growing. So it's all positive. We're not seeing this cannibalization, which I think is really impressive. And here's the other thing. This new volume that you're seeing for the Mini-Dax, that's new people coming in recognizing the opportunity. Now, I have to tell you, when I look at these charts, I think, okay, for the exchange, I'm happy for the exchange. They are very successful. They've launched very successful products, and that's what these volumes are showing us from the exchange point of view. But what about you and me? From a trader point of view, what do these charts say to us? Well, one, we don't see this cannibalization as we've talked about. We see the growth in the Mini-Dax, over 60% growth in the last 2 years, and 35,000 contracts a day. So it says a lot, I think, in that regard, because what it means to you and me is that we can get in and out. We probably have tight bid-ask spreads. We have liquidity. It also means there must be something there or people wouldn't be trading it. So the fact is they've created a product that people want to trade. I think for you and I, that's a reason to check it out, to see if it's appropriate for what you're doing, possibly when it comes to trading. I also have a question here. How is the order book liquidity and volume? The order book liquidity and volume, well, if you look at that, it's steadily growing. Monthly trading volumes on the DAX and the Mini-Dax show stable and growing volume figures as we look at these charts, and the trading volumes in the DAX, the full-size DAX, remains at a high level. The Mini-Dax, as I mentioned, their daily volumes are growing at 60% from 2016 to 2018. So, again, we want to keep in mind that Mini-Dax volume, it's driven by new participants coming into this market. So I really find that very interesting. Let's move on though. Let's take a look at a comparison of the DAX versus the S&P 500. And the higher volatility, that's the green line, by the way, is the DAX, and that dark line or that black line or blue line is the S&P. And what you're seeing is that the DAX does have higher volatility. And higher volatility indicates higher price movement. And higher price movement, typically for a trader, it means that you have opportunity. And it may be offering us better trading opportunities with that higher volatility. So I like this chart because it gives me a feel for how does it compare to other investment choices. So if I want to add some volatility to my portfolio, or if I want to add some volatility in terms of my trading strategy, because that's what it needs, well, maybe the DAX is a market that you and I should take a look at. Now, there are some differences in the contracts. I just want to highlight a few of them with you. Uh, First, we got the Mini-Dax on the left, the DAX on the full size on the right. It's €5 per point for the Mini. It's €25 per index point for the DAX. The contract terms same, up to 9 months. Minimum price change. In the Mini-Dax, it trades in 1-point increments. In the DAX contracts, it trades in half-point increments. So the tick value for a 1 index point move in the Mini-Dax is €5. And over in the DAX, full-size contract is 12.5 for a half a point move, or €25 for a full index point. The rest of the terms really are the same. Settlement, cash settlement, final settlement price, all those characteristics haven't changed regarding those two contracts. Now let's talk about trading. I'd like to share something with you that is how I approach Japanese candles. And this is something that um, I was exposed to while teaching a course on market profile at Bank of America back in about 1986 or so, I think is when it happened. I was in there teaching yield curve traders for customers of the bank. Part of the class was to go into the dealing room and trade 30-year Treasury bonds, U.S. Treasury bonds. So I went into the dealing room, found some trades. I'm walking out. I see a fellow sitting at a desk drawing these candle charts by hand. I asked Kuno-san, what are these? He said, oh, these are Japanese candle charts. They were kind enough to talk to me about this. But what went through my mind is what I would see and hear on the floor of an exchange. Because one of the things that you would, let's say maybe a benefit, is that you can see the order flow coming in. You see the broker's hands and what they're saying, which gives you an idea whether they're buying or selling and the size that they're doing that at. You don't know who's doing it, who's making the trade, but you see the volume in that regard. We don't need to be on the floor anymore, by the way, to reach these conclusions, not with the technology we have today. Like with what Dorman provides you with NinjaTrader, but let me show you how I approach this. As many of you know, the closing price above the opening price, well, they draw a box between the open and close. I have it colored green, traditional colors red actually. That's called the body of the candle. As many of you know, I think it represents buyers coming into the market. On the other side, when the closing price is below the opening price, I think that represents sellers coming into the market. Now I have the high and low matching the top and bottom of that candle. By the way, the reason I say that higher close is called buying, it's because what drives a market? The people who are creating that order flow. And in this case, if most people want to buy this market, it will drive prices higher. It's that competition, I believe, that we're looking at. And we also know that the high doesn't always match the body of the candle. It can be higher than the body of the candle. And that vertical distance, called that vertical line, is called a shadow. I think it represents sellers at higher prices, and at lower levels, I think it represents buyers. Now, what I'd like to do, oh, and these are important references that we're going to come back to. But you know what I'd like to do? Wesley, would you mind screen sharing and showing us the current markets? Perfect. Perfect. So we got a monthly chart here right now of the DAX. Well, you know what we're seeing is a continuation of that action we were looking at just a few charts ago. We're seeing positive movements with the DAX. We're seeing an up move here in the monthly. Uh, let's take a look at the weekly chart, Wesley, and see how that looks. And what we're seeing with the DAX is a market that's waiting for information. We'll see that in just a bit when we look at intraday charts. A weekly chart is interesting because what it does is it gives us a reference. You can see the last couple of weeks we've been down here a bit. It tells us how confident are people going into the close. So if you look at this large green candle above December, it's about 1/3 of the way into the chart. If you look at that candle, that guy right there. Yeah, thanks, Wesley. If you look at that, at the end of that week, were people getting out before the weekend? No. They said, I love this market, and they held it over the weekend. That's what that weekly chart, I believe, is telling us. If we had a big shadow on the top, it would tell us that people saying, well, I'll get out on Friday and get back in on Monday. They were not confident about holding this position over the weekend. And if you look at the middle of the chart, you see those shadows on the bottom of that one that's just touching that blue line there that you have, Wesley, up to that, no, to the, or those right there, yes, right there, that's good. Those shadows below that reference line that Wesley drew up there for us, if you look at those shadows, they tell us that they're buying the break. That when we go below that level, you're seeing that shadow at the end of the week. Somebody's buying it, or we wouldn't see that shadow. And we're seeing that stronger close at the end of the week with those green candles. And we see the last couple of weeks it's been soft. But let's move over to the 60-minute chart. I'd like to just jump over to that, Wesley, because I'd like to look at the current market action. We have a lot going on right now. I mean, we have the trade treaty. That's one issue out there. But we also have interest rates coming up. On Wednesday, we're expecting the Fed to come out with actually an increase in interest rates. That's no surprise. In that regard, I think what's going to be interesting for us, though, is to watch what happens in terms of how they plan out into the future. How many more increases do they see happening? The frequency of that is really critical because it really determines the impact on our economy in terms of velocity. When the interest rate changes, it takes 6 to 9 months for the U.S. economy to absorb it, to feel it. And so if it's done too frequently, sooner or later it's like a tidal wave coming into our economy. Who knows what the magic number is? And it's a tough job. But I think right now they've been very good at being moderate about that. And the ECB, if you look at them in Europe, they've been very conservative as well. People are expecting some changes, but I think it's reasonable to expect that. For example, inflation in the United States is about where the Fed wants it. The economy is strong. You know, if you just look at today, U.S. consumer confidence is at an 18-year high. So the Fed has the room to make an increase in interest rates. So I find that interesting. The trade talks, let's just talk about that for a second. We talked about automobiles before that. There's still a lot of work to be done in that area, and it is something that you and I want to monitor. One of the issues is that you can have a trade tariff, but people also step around it. So for example, China wants to sell steel. Well, they can sell steel to Vietnam, who sells steel to the United States without the tariff. So there are ways that people do step around it. Right now, stockpiles are very high in many countries that are looking at import tariffs. That's a possibility. How it actually filters out into our system in terms of impact on pricing still remains to be seen. So we have, and then we also have coming up here, we have the Iranian situation. The Trump administration is saying we're out of that deal. Europe is saying, no, we want to be in that deal. If you look at that situation, here's some things to quickly think about. That see, how do we want to approach this? If you look at France, Germany, they have a lot of economic interest when it comes to Iran. They don't necessarily want to walk away from that, although some companies have. Now, just to give you a quick background, the Iranian oil, where does it go? Well, 20% goes to EU, 26% goes to China. India gets 23%, South Korea 11%, Japan 5%. So there's a lot going on in that regard, but here's one thing I want you to keep in mind. We have enough crude oil to meet demand globally. There is not going to be a shortage. And what does this chart show us? This is a 60-minute chart. To me, it shows us a market that's waiting for information. Now on Thursday, the ECB, the Bank of England, the US Fed, Bank of Canada, all those chairmen and governors are going to be speaking to give insights on what's going on. But right now we're seeing the market going sideways. That's reasonable activity. We saw strength coming into this just a few days ago, and basically we're in that sideways mode. I am bullish on this market. I do look for further movement to the upside in the DAX and in the Mini-Dax. So I think it's one that you and I should definitely pay attention to as this week develops. If we're going to see buyers here, we should see them in the next 2 days, especially. And especially going into Friday. Are they confident going into this weekend? You know, Wesley, I've got just a little bit of time here, but could you show me, if I wanted to make a trade, since we're on your platform, um, what are our choices? Because not everybody is looking at this as a NinjaTrader client, possibly.
Sure, Dan. Can everybody hear me all right? I'm just going to...
You sound good.
Perfect. So the easiest way to place a trade on a NinjaTrader chart will be to pull up the Chart Trader panel. And the quickest way to get to the Chart Trader from the chart is up here at the top. We've got some icons. It'll be this fifth icon over from the right. And it says Chart Trader when I hover over it. If I click on this icon, I have a few options here. If I just click on Chart Trader, it'll pull up the Chart Trader window over on the right side of my chart. And we've got a few options available to us right away. We can see over in the top right, we can either buy or sell using these buttons at market, ask, or bid prices. So that's a really quick way to enter the market. Also, if we want to maybe place a trade at a certain price within this chart window, we can right-click at any price, and it's context sensitive. So if we right-click in there, we can place an order. You'll see if I right-click below the market, it's going to give me some options to place a limit order, either a buy limit order or some sell stop orders here. Also have a market if touch option that I can put in there. But if I right click above, you'll see I have a sell limit and buy stop market, buy stop limit that I can place at that price. So it's really, there's a lot that you can do there. You can place orders very quickly and efficiently right from the chart. So let's say I want to place an order here on my chart. I'll just right click and I'll put in a buy limit order here. I'll click yes. And you see I have an active order on the chart now. I have a little order flag here. If at any point I want to modify this order, I can just click on this order flag, move it to wherever I'd like to modify that order to. And you can see we also have a number over here on the side of this flag that I have picked up, just showing me how far I am from the last traded price. So I can move that around as I'd like. And then once I click again, that order has been modified. It's a very easy way to place orders directly on the chart, Dan.
What that is, thank you for doing that. What if I wanted a bracket order? Let's say I want, X number of ticks of profit with X number of ticks of risk. How would I do that? Or can I do that?
Yeah, of course. That can be accomplished with NinjaTrader ATM strategies. And from the Chart Trader window, we can access ATM or Advanced Trade Management from this menu here. And if I just use this drop-down menu and select Custom, I have it selected already. So if I hit Edit on that, it'll pull up my parameters for my stop strategy, or excuse me, for my ATM strategy. And with an ATM strategy, what you can do is put in a stop loss and a profit target for your position. And this will protect you once you do enter the market with two orders out there that either you'll be stopped out or you'll take profit. So if I wanted to place, say, a stop loss 6 ticks behind my entry price, I can enter a value of 6 here under stop loss, and then this 8 here would represent 8 ticks ahead of my entry price for my profit target. So you can modify these as you like. You can change the order quantity. I'm just going to change that to 1. So if I want 1 contract that I'm entering the market with, I can enter 1 there. And I'm going to click OK now. Now if I were to enter the market, I'm just going to hit the buy market button to enter myself into the market, and then click yes on this confirmation. You can see I'm entered in the market here, and I have both a profit target and a stop loss attached to my entry. Now not only do we have those, but just as
and the same thing.
Yeah, same goes with these orders like we had with the others. If you want to modify your stop loss, say you want to tighten up that stop loss manually, You can click on the stop loss order tag, move it just a little bit, and then click once more, and your stop loss is moved. So really easy way to modify those orders. Thanks for asking, Dan.
That is. Thank you. No, I'm glad you showed that because I think that just having that visual impact and the ease of changing an order can really be helpful, especially if you're looking at multiple markets. And, you know, something I saw flash up here. Oh, Brian just asked about what if you want to set an order up to a target or a specific price? Can you do that? You should be able to do that with your order type, right? If you wanted to put a price objective in.
Yeah, absolutely. You can modify the profit target and stop loss however you'd like. NinjaTrader also supports automatic trailing stops and you know, an automatic break even if you want to use that for your stop strategy. You can also set you can set orders to track indicators in NinjaTrader as well. So if say you have a moving average that you want your stop loss to follow, you can do that as well.
Great. You know, and I saw something flash by, but I didn't have a chance to read it entirely. But it was a comment about one of the charts that we looked at, which may have been a monthly chart, and I was talking about weekly. But the main point I was trying to emphasize is that a weekly chart does give us that barometer of commitment. How confident is the market or participants when they come in? If that was the question, I really didn't see it all. You're welcome, Brian. Wesley, well, I know we wanted to keep this near a half hour or beyond that right now, but thank you for showing that. I think that's really interesting. A very intuitive way of interfacing with, you know, orders and a chart. How about if we go back to our slides, because there are some things I want people to see as far as resources. Uh, you know, for Eurex, take advantage of all the information they have. And NinjaTrader, I mean, free to use this software, that's a pretty good price. Uh, check that out. Dorman Trading, you know, Ninja clears through Dorman Trading. And again, one of the oldest family operated FCMs in the world. So each one of these have very unique sources of information. And you know what's great about going to these locations or these websites is that, you know, it's nothing goofy. The internet's amazing, but there's a lot of stuff out there that's a bit scary, as we both know. Here you can go to resources that are solid, that you can count on. And so please take advantage of it. Obviously, you're sensitive to that. You're a motivated person because you're here today. You're taking time out of your life to explore an idea. And it really says quite a bit about you uh, joining us today. And I do want to thank you for sharing part of your day with me. I really appreciate that. And I also want to thank Eurex, Dorman Trading, and NinjaTrader for making it possible for you and I to be together. I hope our paths cross again in the future. And in the meantime, take care. Thank you, Wesley, for your help today.
All right, and thank you so much, Dan. Again, thanks to everyone for joining us today. Once again, want to give a special thank you to our sponsors at Eurex and Dorman Trading for making today's event possible. If you'd like to review today's presentation at a later date, we will provide all registrants with access to an on-demand recording of today's event as soon as it's ready to view. We hope you enjoyed today's webinar with Dan Gramza. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at NinjaTrader.